Joining me now to talk about it is Kentucky Congressman, a member of the greatest committee. Jason Chaffetz might disagree with this, but the greatest committee in the House, Financial Services. Andy Barr is here. Andy, good to see you. So tell me your take on these new rules coming from the SEC in regard to ESG and what it means for the American consumer.
Well, Sean, good to be on the program, and good to see Jason as well. Look, the Biden Securities
do you mean it's good to see Jason Chaffetz, or are you just kidding? Right?
No, I'm serious. Good to see you, Jason.
All right, go ahead. Sorry about that. Jason's still sitting here.
Look, the job of the Securities and Exchange Commission, the statutory mission of that agency is to protect investors, maintain fair, orderly, and efficient markets, and to facilitate capital formation. It is not to solve climate change. It is not to weigh in on environmental policy. Maybe that's the job of the Environmental Protection Agency, but it is definitively not the job of the SEC. But that's what the Biden administration is trying to do, to transform this agency from an independent regulatory agency designed to protect investors into an agency that's enacting environmental policy over which it has no expertise and no jurisdiction. And so this 534-page monstrosity, this monstrous rulemaking, which will impose huge burdens on public companies, discourage private companies from going public, encourage public companies to go private because of the burdens that it will impose on the economy. It's a real problem because it's going to hurt investors. It's going to steer retail investors into higher fee, less diversified, and lower performing or lower return investments. And I think there's going to be significant legal challenges because the SEC simply does not have the authority over this area of policy. And it's actually doing the opposite of what it's supposed to be doing, which is to protect investors.
You know, you companies that are trying to make a profit and give a return for their investors are trying to make good decisions. But here you have the SEC now stepping in and saying, no, we're going to impose these left-wing ideas of ESG for you that you have to comply with, again, which is mean less profit, less return for investors. And again, it's using the force of government to impose left-wing ideology.
Right. And one of the Supreme Court's basic tests for whether or not a securities regulation is legal is whether or not it is material to the investor. And here we have a situation where the SEC is going to inundate retail investors with a whole lot of trivial information that they don't care about, that's not material to their investment decisions. How do we know this? Because the University of Chicago, in concert with FINRA, did a survey of retail investors. And what they found was that only 21% of all retail investors in America even know what ESG stands for. What retail investors are counting on from investment advisors and stockbrokers is maximum returns. They count on that to save for college. They count on that to save for retirement. What they don't want is politics to interfere with the returns that they expect. And these ESG funds that the SEC is now trying to steer investors into have lower returns, higher fees. They're less diversified. Investing 101 is diversification. But when you're heavy in tech and there's a big tech sell-off like we've seen over the last 8 months, and you're light on energy, where energy stocks overperform the market as a whole, guess who loses?
That's right.
The retail investors. And so the SEC is doing the exact opposite of what it should be doing, which is to protect investors.
So what do you do about it, Andy? You're on the committee that has oversight over the SEC. If Republicans take control, is this going to be a top issue for the committee?
A top issue, a priority. Look, we want to focus on protecting investors, holding the SEC accountable for doing the opposite of what the SEC's mission is to do. And we also want to help cure the inflation problem. And the way we solve inflation is not to underinvest in American energy, but to facilitate the financing of American energy, to depoliticize the allocation of capital and make sure that Americans can realize returns by investing in American energy, investing patriotically in American energy dominance, and making sure that American energy companies have access to the capital that they need to restore energy production and lower the price at the pump. Lower prices, frankly, at the grocery store as well, because fuel goes into everything. It goes into manufacturing and transportation. Obviously, the price at the pump and heating your home. But this is the solution that we need to stop bad regulations like this. And one more point, Sean.
Sure.
The Supreme Court in the recent West Virginia decision said that major economic questions have to be specifically authorized by Congress before unaccountable, unelected bureaucrats can issue regulations. Well, here you have an example of a runaway, out of control federal bureaucracy, the SEC, going beyond its statutory mission, issuing a rule trying to basically legislate in an area that Congress has specifically denied them authority. In multiple occasions over the last several years, Congress has considered giving the SEC the authority to regulate climate disclosures and specifically chose not to give the SEC that authority. This new Supreme Court precedent and the West Virginia decision is a roadmap to how litigants will defeat this SEC regulation.
I think we also have to let the environmental activists know that it's actually oil and/or gas that goes into jet fuel that they fly around in their private jets for. That might be helpful as well. Maybe they'll have some more investment in American energy. Andy Barr, always a great conversation. Thanks for joining me.
Great to be with you, Sean.